Good afternoon and evening, ladies and gentlemen. It is your host, Konstantine Polyakov, on PRsonalities, episode 7, when we got the one and only special guest, Pimento.
How do you do?
Pimento is a regional vice president for Eastern Canada, all of Eastern Canada. Is there a border for it?
Well, basically Ontario East.
Ontario East. She's the regional vice president for Eastern Canada for HomEquity Bank, which is going to be the subject and topic of our conversation today. Now I'm going to be quiet for a few, and I'm going to let Sue introduce herself once more and tell us just a little bit about how she got into the business and some of the achievements and things that you've been able to collect over the past few years.
Thank you. Thank you. I've been in the mortgage world for at least 25 years. I started as a mortgage rep with one of the national banks, moved on into the broker world, and was quite a successful broker in the mortgage world for quite some time. Then I moved into management. I specialize in creating dynamic producing teams, and that's where my heart is these days.
So it's all about building the teams.
Yeah, it's about building a very dynamic and producing sales team. Mm-hmm. It starts with having a compelling product and a compelling story.
Yep.
And I've had the great fortune of winning many, many awards in the mortgage world. I actually served for 4 years on the board of directors with Mortgage Professionals Canada.
Oh, wow.
And I had my own brand once upon a time called The Mortgage Coach. And
the mortgage coach. So were you coaching other brokers and agents, or?
I was. I did have a mentorship where I was mentoring new people to the industry, but I also coached clients not only on how to get a mortgage, but how to get rid of it.
Okay.
Anybody can get you a mortgage.
I love that.
It's about how to get rid of it.
Beautiful.
So fast forward to 2015, I'm now with HomEquity Bank, and we have quite a compelling story and quite a compelling product, and it's perfectly timed.
I could not agree more. Well, that sounds like quite a set of accomplishments and quite a different palette of, jobs and different positions that you've held over the course of the last few years. And so you really have been more of a sales-oriented manager.
Yes.
And so you're pretty much past, 10, 15 years, you've been really
past
just
10, 12 years.
You've really been just kind of ironing out the best of the best
Right.
of the sales teams amongst the Mortgage Alliance group, and as well as HomEquity Bank and MPC as well, and making sure that
Invis MI.
and Invis MI and all those guys. So
yeah,
quite the wealth of experience.
You're just being kind. You're just saying I'm old. That's right, I am. It's okay. It's okay.
Well, actually, that's going to be one of the topics of our conversation today. So stay tuned. Let's talk a little bit more about HomEquity Bank. So HomEquity Bank is your current employer.
Correct.
And so
we're Schedule 1 bank.
Are you scheduled? Okay, you're Schedule 1 bank. Okay,
yeah.
I wasn't sure if I should go there, but we did. Now, HomEquity Bank has an interesting palette of products.
Correct.
And that's really what separates HomEquity Bank from your CIBCs and Scotia Banks and TDs and all the other guys. In fact, you guys really have an entirely different palette of products from what I know.
Right. We're what you call a monoline bank.
A monoline bank.
Yeah, and what that means is we specialize in one product, and we only offer one product, and that's a reverse mortgage.
That's it.
Yeah.
And that is also going to be a big topic of our discussion. So I guess the question really is, and this is not just me, I bet you the whole audience is sitting there wondering, what the hell is a reverse mortgage?
Well, it's not that unique. It sounds a bit unique, but it's not. A reverse mortgage is a standard collateral charge. So it's the same registered charge as you would get with a forward mortgage.
Yeah.
The only difference, forward mortgage. The only difference with a reverse mortgage is that payments are not required. So the payments are capitalized onto the principal, and we get paid out when the property gets sold.
So the idea is that in a traditional mortgage, we pay into it every month, so we're trying to bring the balance down month after month to eventually have no mortgage.
Correct. So there'd be a principal and interest payment amortized over whatever period you
25,
amortize. Yeah, whatever you
years.
amortize your mortgage for. So in our case, there's no payment, so there's no amortization. The payments get capitalized. They get added to the principal, and so it compounds over the length that you have the mortgage.
So this is the part that is a little bit tricky. So people are sitting there and saying, well, so eventually I'm going to have no equity left. So how does this...
Eventually.
How does this not add up?
However, we're what we call a traditional equity lender. So, and we have very sophisticated future value charts. So we know in Newfoundland or Vancouver or Ontario, for example, what we think the property will be worth in years. And then we also have very sophisticated actuary charts. That's on life expectancy. And we put the two on top of each other, and we come up with a very conservative loan to value. So that's what we're comfortable lending at. And so, for example, our minimum age is 55.
Okay.
Our maximum loan to value is 55%.
So maybe let's just actually simplify this a little bit for the audience. So
Okay.
when you mean loan to value, what you mean is the amount of the mortgage versus the value of the home.
Correct.
So let's say, let's give it a hypothetical idea.
For example, if your home is worth $1 million
Okay.
and we're lending you 500, that's a 50% loan to value.
So 50% loan, 50% value.
Right. Now the maximum we'll go is to 55%.
So only...
So we're building in 45% equity, and you're only going to get access to 55% if you're older. So when I say older, I'm saying mid-80s. So we guarantee in writing that you will never owe more than what the property is worth. That's a big guarantee.
Okay, wow.
So in order to set ourselves up to succeed, we are a bank. We are here to make money. We are conservative in what we lend. So, for example, our average loan is on the books for 11 years, but it could be 30 years.
Yeah.
And because we guarantee you won't owe more than what the property is worth, we're conservative in what we lend.
That makes
Make sense?
Well, you got to make sure that you can keep your promise.
Correct. Correct. And we don't want to lose money either.
Well, of course. I mean, if you start doing what the States, I guess, done back in the 2000s. And
Well, that's a good point, Konstantine, because in the States, there's over 4,000 agents selling reverse mortgages with no regulations whatsoever.
Well, wait a second. How many providers are there for reverse mortgages in the States?
I don't know the number of providers, but I do know that there's over 4,000 people offering reverse mortgages. And so when you don't have any regulations, then you start to get a little aggressive with the loan to value.
Yeah.
You'll lend. They don't offer the same guarantees we offer, and you can get some trouble. You can set some people up to fail, and when that happens, of course, the media jumps on it.
Oh, yeah.
The first time you go Google reverse mortgages, you're going to grab something from the States that didn't go well.
Yeah.
So we deal a lot in myths, and there's a lot of misconceptions out there. There's actually probably more inaccurate facts than there actually are accurate facts.
Okay.
So,
You know what? Being your certified mortgage specialist,
Yes, you
I
are.
actually do face that adversity very often. You know, I was just mentioning to you also earlier, there was a story where another lady simply wasn't, she was comfortable maybe with me to go ahead with this kind of a product, but she wasn't comfortable with the idea of it. She could not fathom, how can this be no payments?
I get it.
You know?
And one of the biggest objections we get is, wait a minute, you're going to give me a bunch of money. I'm not going to make any payments. You're going to charge me interest, and you're going to guarantee at the end of the day I have money or I have equity left.
Yeah.
I mean, I may be old, but how stupid do you think I am? Right? So the bottom line is they think it's too good to be true.
Yeah.
However, when you look at a graph on how the principal accrues and capitalizes versus the property value, which is the much bigger number, it takes, eventually they will meet, the two of them will meet.
Yep.
And they'll actually crisscross, but we're talking probably close to 25, 30 years in the future.
Down the road, yeah.
Yeah.
Well, that is where I believe you guys have a really handy tool online.
We
You
do.
can actually punch in some numbers
Yep.
right on the website,
It's a calculator.
and you can just get pretty much that visual illustration, right?
That's exactly right.
That gives you the spread, and you can actually see how if your balance does this a little bit over time. I mean, with equity, what are we looking in terms of appreciation equity in Canada? Just Ontario, even.
Well, you know what, you can make the model based on anything, but we tend to make our models based on 2 to 3%, which is
Okay.
extremely conservative. I mean, Ontario's been running 6%.
Year over year, no problem. Eh?
Yeah.
So essentially, the idea is that it kind of does this on your balance, but your equity does the exact same thing.
And it's a larger number.
And it kind of gives you a
Right.
bit of a spread. So in fact, you're actually more likely to be left with more equity
Correct.
and less of a balance than vice versa.
Correct, correct. Plus, it's important to note that for the senior, their goal is not accruing equity. When you're a first-time buyer, the first thing you want is, what's my interest rate? I want to pay more principal, less interest. I want to achieve equity. For the senior at this point in their life, they've already done that. They're actually millionaires in a lot of cases. They don't even know it. Right? They're living in it, and it's really hard to take your bathroom to the grocery store. It just doesn't work that way. So, but what their goal is today is quality of life.
Yeah.
The stats are pretty compelling, Konstantine. 91% of seniors don't want to move. Just pause for a minute and think about that. Think about your parents. Think about your grandparents. They don't want to move.
It's very true. They really don't.
When they did their financial plan back in the 80s, all of it was based on a concept of downsizing. Mm-hmm. You're going to sell the big Scarlett O'Hara staircase house. You're going to move into a condo. Sounds good?
Yeah.
Everybody signed up. There's a couple of big flaws. First, they don't want to.
That's very true, yeah.
Second, in order for the numbers to work, the senior would have to move 2 or 3 hours out of their current community. So they're leaving their church, their shops, their friends,
You're right.
all of their infrastructure.
Yeah.
They don't want to do that either. Or, conversely, they've got to move 8, 10, 12, 15 stories into a condo.
Yeah.
They don't want to do that either. So, and then the second flaw is nobody anticipated people living as long as they are today. Back then, a financial plan was to 85 years old. Okay. And that made sense. That made totally sense at the time.
85?
85 years old.
That was in the 80s?
That was back in the 80s.
Okay.
Fast forward to 2017, and the stats are that you have a 52% chance to live to 92 and a half years old.
So you're actually more likely to live past 90.
One of us sitting right here is likely to live past 90.
the age of 90.
We could take some bets. So right away, there's a 7-year gap for a lot of people in their financial planning, right? And the biggest fear for anybody is running out of money.
Yeah.
Right? Outliving your money. That scares people. It keeps them up at night, actually.
I bet.
Yeah.
That's actually very interesting. So this is, we're talking, are we going back to the slides now? Or we...
Sure, we can go back to slides if we want to go to slide 2.
Well, actually, yeah, why don't we go straight to it and talk a little bit about the opportunity. So I guess what I wanted to capitalize on is that this is a very niche market.
Correct.
This is a very niche product.
Correct.
How many other companies in Canada today are doing this?
Just us.
You're alone. You're the only one.
We're the only game in town.
Ladies and gentlemen, this is the only game in town.
We're the only game in town.
HomEquity Bank is streamlining this product, beating all the competition to it, and really making a better name for reverse mortgages than the States were able to do.
Correct,
and
correct.
I think that's,
we have a much stronger model. I mean, we're Canadians, for heaven's sakes.
That's right.
We're conservative. We're safer. We want to do things right. We want to set people up to succeed. And as businesses, we want to make money.
That's right.
Now, I wonder how many people out there could guess how long we've been around. You know the answer, so you're disqualified. But I wonder how many people out there know that HomEquity Bank is a 30-year-old company.
Oh, wow.
30 years old. Another fun fact, reverse mortgages are 400 years old.
What do you mean?
I know, 400. The concept of a reverse mortgage has been around for 400 years. Here's the thing, though. The demographics weren't in our favor. For a reverse mortgage to work and be viable, you have to have an older clientele. You can't do it younger.
And I guess earlier there really wasn't...
Well, now, if you look at the baby boomers, you look at the demographics, just walk down the street, just count the gray hairs. You're going to see that there's more and more people in that demographic. So that's awesome news for us. But for the people who are in that demographic, like myself, I know, everybody's shocked, but these people, they've got some challenges as well. None of it is health. That's the great news, right? That's the great news. But here's some challenges. A lot of them back in the 80s, there was a big push for corporations to have people be contract employed.
That's right.
They didn't want the overhead of the pension, the benefit, etc. So that's awesome. So a lot of these people went out and they've become contract employers, they become self-employed, freelance, often working for the same company.
Places, yeah,
right.
just as a contractor.
Right. It was a great move for the corporation. They saved billions of dollars on these benefits. But fast forward a couple of years or a couple of decades, and now people in their 60s, early 70s
I see where you're going with this.
are looking to retire.
Yeah.
That'd be great, except they don't have an income.
No pensions either. Well, very little pensions, really, and truly.
So that income or that pension income is missing for a lot of people. Now, in fairness, a lot of these people did extremely well. So they've saved money. But we can quickly do some math. Even if they saved $1 million, $1.5 million, at 65, with a good chance of living into your 90s, you can do the math and quickly see that that's not enough money.
Yeah.
So we've got people who might want to retire or might want lifestyle and are having to live longer. I mean, right now, the average retirement age is close to 70.
Oh, wow. I didn't know that.
In the last couple of years, it's gone from 63 years to 70 years. Now, I doubt it. I doubt there's people putting up their hands saying, I love my job so much. I want to work another 7 years.
I think it's due to the lack of income, unfortunately.
Correct.
That's just
Correct.
what it is.
Yeah, necessity is the mother of invention.
Yeah.
And plus the fact that people are healthier and able to work longer.
They kind of stick with it.
That seems to be what's happening.
Actually, let me just interrupt you for 1 second. So we are already looking at some of the slides on screen for the audience.
Yep.
So we kind of covered off a little bit about the opportunity, or have we not?
Yeah, well, we've looked at it, and you know what? Just to recap a little bit on slide 2.
Yeah, slide. Go back to slide.
Go back to slide 2.
Yeah, some of
Opportunity?
some of the numbers are a bit staggering when you look at it. 23% of seniors struggle with debt.
So every one in four.
One in every 5, close to 1 in every 4 struggle with debt.
Wow.
13% of them retire with a mortgage. And 18% are actively looking online. And we can talk about our digital strategy later for a financial solution. And some of it is debt, and debt's got a bad rap. I mean, let's think about it for a sec. It's expensive to live in Toronto.
And this is, you're talking for 18% of the seniors?
Correct.
Online?
Yeah, and that represents 845,000 seniors are actively looking online for a solution.
I didn't think there were that many seniors online in general.
Well, your grandma's on Facebook, I'm here to tell you. It's not just for the young.
All right.
So when you have a look at these numbers, and debt's got a bad rap. People think, okay, you're in debt, that means you're an overspender, you're a credit seeker, you don't have any self-control, but that's not necessarily true. We're talking about people that are living in Toronto on CPP and OAC.
Yeah.
If they're lucky, taking home $15,000 a year. Let me just pause right there.
Yeah.
$15,000 a year, living in Toronto, and their taxes are likely
about $15,000 a year.
They could be easily that, or $8,000 or $9,000. Plus, you've got to pay the tax man.
That's right.
That's the debt we're talking about. People just don't have the means.
Just to maintain their lifestyle, right? Really, more or less.
Correct. So that opportunity is there. And if you look at the numbers, today there are more people older than 65 than there are younger than 14. So
that is an interesting...
Yeah, the funnel's full at the top.
Wow.
Or at the bottom, I should say, and there's less coming in the top. So this speaks to the need, and I want to point out right now that it's not the seniors' fault. We deal with this all the time. They've sat at their kitchen table for 40 years lecturing their kids, pay off your mortgage, don't get into debt. And here they are, 83 years old, looking to go back into a mortgage.
Yeah.
The truth is, the cards are stacked against them. None of this was known when they were planning their finances. They didn't know they're going to live this long, pensions, etc. And so what they've really done right is looked after this side of their balance sheet.
Yeah.
They are so equity rich. A lot of them are millionaires. They don't even know it. It's so funny when you talk to a senior like that and you say, you're a millionaire, congratulations, you've done a great job. They look at me as if I'm from Mars. What are you talking about?
Yeah.
But they're looking, you know, they have a pretty myopic view and they're only looking at one portion of their balance sheet. When you look at it holistically, they have an opportunity to access their equity, to live on it, and to give them lifestyle, choice, opportunity.
And we're talking about the reverse mortgage. So actually, maybe let's talk about this first. So you guys offer both the income side of it, right?
Yeah, we have 2 products.
And the lump sum.
Correct. So
Okay.
we have a product that's called Income Advantage, and that is exactly what it says. So people can draw down monthly income, and that'll either supplement what they already have
Yeah.
or replace what they might not have. And then the other way is the traditional chip reverse mortgage. And so that's when people take a lump sum, or they can do a hybrid. They can take a lump sum and some at an income advantage
Okay,
as
so
well.
it's actually rather flexible. So if somebody is looking only for, let's say an extra $1,000 just to keep everything balancing,
Yep,
that's perfect. We can look at that.
Yep.
And if somebody's looking for more to make their lifestyle work well, we could probably look at more too, depending on their equity
yes,
and their age,
correct.
which is so very important.
Yep, those are
Okay.
the 2
Do you
drivers.
want to take an audience question real quick?
We have an audience question?
Yeah, we do.
Please bring it on.
All right,
Bring it
this
on.
is from Harvey Malinsky.
Harvey, how are you?
What makes your product superior to other reverse mortgages?
Well, first of all, in Canada, this is the only reverse mortgage. And what makes our product superior to the products that are offered in the States, other reverse mortgage products, is our guarantee. And our guarantee is that the senior or the homeowner will never owe more than what the property is worth. So let me repeat that. They'll never owe more than what the property is worth. So if the market took a nosedive and all of a sudden they owe us $400,000 and their property is worth $350,000, we'll eat the $50,000.
Oh, wow.
Wow.
That's a big guarantee. And so what it does is it protects the senior from anything, being underwater. It's a regular mortgage. It doesn't go into their estate. Their heirs don't pay. There's none of that. They retain ownership of the property. What they simply do is have access to their equity and don't have to make payments.
Beautiful.
And you and I both know, Harvey, we've been in this game a long time. We've seen markets go up and down. And to make a guarantee like that is pretty sound.
That's kind of a big deal. I mean, really and truly, if you're giving that kind of a guarantee, you better have deep pockets.
Well,
in
truth
case something happens.
be told, Konstantine, we've only been underwater a handful of times in 30 years. That's how good we are at future value and our actuary charts and how conservative we are.
So HomEquity Bank has been giving reverse mortgages for 30 years, this whole time.
That's correct.
Wow, that is quite a track record. And you
Now-
the guarantee has always been the same.
It's always been the same. Now,
Wow.
we've not always been a Schedule I bank. We became a Schedule I bank in 2009.
Okay.
Prior to that, we were a trust company. At one point, we were public. And when we became a bank, it's very important. A, it gave us credibility, but more importantly, it gave us access to funds. And when we're able to source our own funds, it dropped the cost of borrowing, which dropped the interest rate. So
course.
once upon a time, we were fairly expensive. Now
Well,
we're not.
it's a rather risky product for you, being
Correct.
a lender. I mean, again, it's a very niche market, which is what this show is all about today. And so being able to come into a market that's so niche and so special in its own way, and being able to take it and just streamline it and be able to have a successful track record for so many years is very impressive, I think.
Yeah, the other thing with being a Schedule I bank is we're monitored by OFC. So all the same suitability, we don't have to do a stress test. There's no payments. When there's no payments, there's no
right.
TDS or GDS, there's no ratios whatsoever. We do ask for income. We do pull credit. We've got to make sure that the senior can manage their taxes, their property insurance,
Yep.
and any condominium fees they may have.
And if they have a bit of a shortfall, we just supplement it with a bit of an income advantage,
We can give them an income advantage as well.
being a flexible product. I love it. I'm kind of the more I learn about it, the more I fall in love with the idea and the product.
We call you a convert.
Well, a convert. So I've been converted. And you know what? And I believe that it's so very important that people know a little bit more about it, just so they can make their educated decision whether or not this is something for them, their
Well,
parents.
think about it for a
and-
minute. We started off originally as a need, a lender of last resort.
Yeah.
Picture the little old lady with a bucket in her living room because she's got a hole in her roof.
Oh boy.
not eating well, and either you get a reverse mortgage or you sell your house.
Yeah.
And I would say that's probably 20% of our business, more likely 18. The lion's share of our business is the want customer. Because here's a fun fact. Any money that they take in a reverse mortgage is income tax free. Do I need to repeat that? Because it's their principal residence, it's income tax free. So now you take that to a savvy senior, and all of a sudden, a reverse mortgage is now becoming a financial strategy. It makes total sense to take your equity tax-free before you access your savings, which has tax implications.
Oh, I see where you're going with this.
Yeah, and plus the fact that it'll bridge your money. Because remember what I said originally. The biggest fear of any senior is running out of money, outliving their money. So we've already done the math on how much money was saved to age 85. Now they're living longer. So this gives them a tax-free bridge, if they want it, to make their money last longer. Now, the big key is, in any kind of investing, you never want to collapse the asset.
That's right.
So when they're taking equity from their property, they're not collapsing the asset. It's still appreciating at that 2, 3, 6%.
Giving them the return.
Correct. And so are their savings. The minute you collapse or withdraw some of those savings, albeit a tenth or 20% of it, you're collapsing that up. You're losing the opportunity for it to grow.
Very true.
Now, if you listen to anybody, they will tell you time, money over time, with interest equals return. But time is a very big factor.
That's right.
So if you can extend the investment life of your investment another 2, 3, 5, 7 years,
get more money.
You're making money. And some of our seniors create incomes. We talked about that pension gap. So we've had people come to us and they'll take a lump sum, maybe they'll take $400,000 or $500,000, and they'll go buy a condominium. Or
so they start to reinvest.
Right, and because there's no payments, aside from the condominium fees and the taxes, the rest becomes income. Now, that sounds like a pretty good idea.
That's a very nice layout, yeah.
Pretty good
I like
idea.
that.
So we find all kinds of opportunities that way.
You're giving me all kinds of ideas right now, so I'm going to go
And now you've got 3 assets.
This.
You got your own asset growing. You've got the investment property you've bought growing, and your investments are still. You've not collapsed any of those assets.
That is amazing. That is amazing.
And so here's another powerful thing. Anytime you want me to stop talking, you're going to have to kick me because I get pretty excited about this. But now what's happening? Remember we said that downsizing was flawed.
Yeah, not everybody was going through
Correct. They got to move up or they have to move out and the numbers don't work. So now what people are doing is they're using a reverse mortgage to downsize. So you sell your property. Let's say you sell it for $800,000. You want to buy a property in the same community. You're not getting it for $2,000 or $3,000. We all know that. So maybe you need $4,000 or $5,000. You take a reverse mortgage on the purchase, depending on what you qualify for. You're going to increase your purchase power from anywhere up to 55%. And so the numbers now work. You can stay in your community.
I see what you're saying, yeah.
You get it?
Yeah.
And because there's no payments, that's the magic of it. And that's really the only unique
So you can even you can purchase with it too. So it's not necessarily a way of just accessing your equity in a home. If you are looking to downsize, hey, well, how about a downsize with no payments?
Right. And I was mentioning to you before the show, I was at a presentation early last year put on by Mortgage Professionals Canada, and they had a member of TREB on the panel. And he was indicating, somebody was asking him, do we have a supply, demand, is there a bubble, that whole conversation. And he said, he didn't say this, but in essence, he said it's the seniors that are the problem. There's over the age of 55 there at that time there was 189,000 people in the TREB catch area that owned homes. All of them they had expected to downsize at some point, maybe already, and they don't want to move, so they're not moving and they can't afford to stay in their community. So if people were to start to use the reverse mortgage in purchasing, they could downsize. Because let's face it, at some point, some of these homes are too big for them to manage.
Well, yeah. Come times.
Right. So that's become a popular strategy as well.
Yeah. No, that makes quite a bit of sense.
We've got another question.
Oh, look at them rolling. Bring them on.
So, again, from Harvey Malinsky,
Okay.
would be good if you can give an actual example of real life situation, i.e., a 68-year-old with a condo, no debt, condo is worth 800K today. How does the reverse work? And I believe the follow-up is, what is the maximum amount one can take on 800K?
So if you're buying $100,000 of a condo.
Okay. So remember how we're reverse, right?
Yeah.
It's like Michael Jackson moonwalk. We work in reverse.
Stepping back.
So the value of the property is less important than the age. 68 is the key in that equation. So 68 is a young senior to us. So we probably, and we'd have to put in the exact birth date and the postal code to get the right formula. But roughly somewhere around 33% would probably be a good guess.
So 1/3, roughly.
Yeah, I might be a little ambitious, but somewhere in that neighborhood.
Okay.
On the 800,000, and it's on an appraised value. And so that doesn't change. When we approve a loan, we approve it for life. It's never reapproved. So if one spouse dies, you know, you go back to your bank, they say, I'm sorry, you don't qualify for this line of credit anymore. Talk about a bad day. We don't do that. So you're approved for life. And as a matter of fact, you can come back to us and get more money because your property is going to appreciate and you're going to get older.
Beautiful.
So you qualify for more. So fast forward that 68-year-old, you know, they may, let's say we're going to give 25% for easy math.
Okay.
That's 200,000 on that 800. And in a couple of years it could be more and it could be more. So that's how that'll work. Now, if that senior were well into their 80s where we're maybe giving the 50% mark, so that 800,000 condo, now they could free up 400,000.
Yeah.
Remember, no payments. And they can go do what they want. As long as it's legal, they can do anything. And what a lot of people are doing are giving what's called a living inheritance.
Right.
So with the new mortgage rules, we all know that if you purchase a property of $1 million or more, we also know that the average household price in Toronto is 1.2.
That's right.
That's for a semi. Sorry, put your
My
seatbelts
generation
on.
has to fight the adversity there.
Correct. So, you know, if we look at that, they need at least 20% down payment.
Yeah.
Doesn't matter if they're a first-time buyer or not. So that is steep. And what used to happen is they'd go to the bank of mom and dad or the bank of grandma and grandpa and ask for a gift.
That's right.
Now, I put it in air quotes because it's a gift, wink, wink, and pay me back when you can. And
Yeah, of course.
often they would take it from their line of credit, which would create payments. Now what's happening, people have started to figure this out. So they go to the bank of mom and dad and say, forget going with a line of credit with payments, get a reverse mortgage. You don't make payments. I don't make payments. I can buy my $1.2 million semi. And I qualify now. And you're going to give me that money anyway.
Yeah. Listen,
At some point.
That's a great way for the parents to avoid the extra liabilities.
Correct. And you know what? There's no badge of honor to wait till you've passed to give your legacy.
I mean,
more and more people are thoroughly enjoying watching their children or their grandchildren enjoy
their home and
their inheritance.
their family and the
we
good
had
things in life.
we had a customer and he had 2 grandchildren, and he came to us. He wanted $200,000 in a reverse mortgage, and he wanted to pay for his granddaughter's medical education in Oxford, in the UK, and wanted to pay for his grandson's legal education in Australia.
That sounds very expensive.
It was about $100,000 each.
Wow.
However, he is so proud of the fact that he's been able to give them this gift.
Oh, of course, yeah. That's a
When they start their education, as opposed to, well, okay, I'm dead and gone. Here's some money now. You can pay off part of your student loan.
Yeah.
So, and everybody's thrilled. It's a win-win-win.
Oh yeah, I mean, as a parent, what's the greater reward than what your kids succeed and do well in life? And if you can give them that little bit extra boost, and it's not affecting your livelihood, well, what the hell? Why not?
Right. It's
Really
making
and
total
truly.
sense.
Listen, this is all really, really good. So thank you, Harvey, for tuning in and giving us some really awesome questions. Why don't we take a step back to our show Bible and just see what we have left here on our list. What we were going to go into next, after talking about home equity bank and reverse mortgage and how long it's been around, we were going to talk a little bit more about the demographics and a little bit more about the presentation that you have.
Right.
So we spoke a little bit about how this is a growing product. This is a growing market because, again, a lot more seniors are becoming of age now where they could really use this type of a product. And so why don't we maybe go a little bit back to our slideshow? And which slide would you like to go back to, Sue?
Well, I don't have a slide for this, but I wanted to make a couple of points.
Okay.
And the numbers speak for themselves. So it's fine for me to sit here and be a talking head and tell you how great this is and how people are buying in, etc. But as a company, last year alone, we grew at 35%. 35% is pretty staggering.
It's a pretty big deal. I mean, if you're already a bank who's been around for 30 years and you're going 35% in 2017.
Correct. And we're on tap to do exactly the same growth this year. And just to give you some idea of how big it could be a problem or it could be an opportunity, depends on what side of the fence you're sitting on, is. So far this year, we've had 70,000 inquiries.
For?
Reverse mortgage, about reverse mortgages.
Online or?
Okay, so we have a traditional media strategy with a commercial.
Okay.
We also have a very big digital presence. So 90% of our inquiries come in digitally.
Oh, wow.
10% come through the traditional media. Now, the traditional media will convert better. So we will close more than you do digitally. It's really easy to ask questions anonymously online. But, my point is we get anywhere between 5,000 and 7,000 inquiries a month.
Wow.
So this just speaks to people looking for solutions, looking for alternatives, wanting to find out more. Our biggest objection is people think it's too good to be true.
Yeah, I've
okay,
faced that myself.
Where's the catch?
Yeah, where is the catch exactly?
Right.
70,000. Jesus Christ, that's a lot of business.
That's a lot of business.
And I'm gonna guess it's only gonna pick up, right? So I think you were showing us a little bit more in the earlier slide that from right now the demographic being about 18% of all Canadians, being of that group that qualifies for the reverse product.
Right.
In the next 10 years to 13 years, we're talking how much? Almost 30 to 40%.
Yes.
That's every 1 in 3 people that you're going to be talking to. I don't care about mortgages. Let's talk about just in general. Whether you're a physiotherapist or whether you're a dentist or whether you are a broker, real estate, mortgage, whatever the hell you're doing. 1 in 3 people in the next 10 years will be a senior. Just think about that.
It's a huge opportunity, and what comes with it is a lot of services.
Yeah.
And none of it's cheap.
Oh, yeah.
And you know what? We're not talking about it, but there's actually a much bigger problem than money. And I deal with seniors all day long, and I ask them, what gets in the way of you having the retirement you dreamed of or the retirement you want? And I'm a banker, so you'd think they'd say money, because that's why they're talking to me, but not one person yet has ever said money. Can you guess what they say?
Health?
Correct. They all say health and mobility. So the good news is we're living longer. The good news is we're healthier, like more mobile. But the truth of the matter is if we live long enough, eventually we're going to have health issues.
Oh, yeah.
The stats say at 81.7 years of age is when the average person starts to have health issues.
A lot of them, I guess.
Correct.
A lot more than before.
So the bigger problem is health. And what our seniors say, if I live long enough, I'm going to have that big problem. So I'm going to do what I can to empower myself to have the retirement that I want now. And that's going to require me accessing some of my equity. So be it.
Well, I mean, again, that's a little bit of a stretch between the age of 55, 60, 65 to the age of 81. I mean, if you're living on the very bare minimum, it's very hard to maintain a good standard of living where you are actually doing good things for your health.
Correct.
and you're taking care of yourself, you are going to see the physiotherapist, and you are getting certain things that could just simply make you feel better, right?
Correct.
Make
Correct.
you more mobile.
And back when we were talking, they were getting their financial plans done back in the 80s. People look at their parents, and they look at their grandparents, and you know what, they're stiff, they're not moving around as much, their knees, their back, whatever. Never in their wildest dreams did they think they'd be as active as they actually are, or could be, right?
Oh, actually, you were talking to me earlier that you are also a baby boomer, right?
I am.
So
Guilty as charged. I'm the demographic.
You're a part of the demographic, and you were telling me you climbed Mount Everest.
Not Mount Everest. Mount Everest Base Camp. Yes.
Mount Everest Base Camp. Well, it's still...
In April of this year, I climbed Mount Everest Base Camp. As a matter of fact, I ran my first half marathon at the age of 60. Did my second a couple of months ago. And, there I am. There's one of the pictures of me at base camp.
That's right.
Yeah, that was pretty spectacular. It's quite a grueling hike, and it's all up because it is a mountain after all, and it is Everest. But, yeah.
And did you ever, this was your childhood dream?
Well, it's been something. I mean, Everest is a pretty mesmerizing thing, and it's quite magnetic. Oh, you've got all the active pictures going on here, Brandon.
That's right.
Yeah, so it's something that, I never thought was possible to start with. And I thought the ship had pretty much sailed. But you know what? If not now, when?
And they listen. And the thing is that I guess, more people should be looking at things in that same perspective. I mean, ultimately, if you got the health for it, then money really is just a number, and you have ways of accessing that money. I mean, just go and enjoy life, right? Yeah,
go for it. Have the life you envisioned.
Take advantage of what you have. And to all those entrepreneurial-minded guys, this is so very important. I mean, we spoke about opportunities in different markets that are emerging. This is a very, very hot topic during the next 10 years. So pay attention and make sure you make the best of it. I think Sue will agree.
Yeah, that's very, very true.
So we talked a little bit more about that. So you know what? The very interesting part about HomEquity Bank, this is something that was very staggering from the data that you showed me so far. So you told me that you get quite a volume of requests online from seniors?
Correct. So I just casually said your grandmother's on Facebook, and that's not a joke. It's absolutely true. It's so funny because when we started to revisit our marketing strategy, one of the mindsets was seniors are not online.
Yeah, forget
They're
about it.
They're not going to, no. And thank goodness we didn't listen to any of that. We went big online, and yes, seniors are online, and especially with this product, and especially when it comes to financing. People are private. They want to do their research in private.
Yep.
They don't want to make a fool of themselves. They want to be informed. So it's commonplace now. What do you do when you want to find out something? You Google it. It's become mainstream. And so lots of seniors are online, way more than you ever think.
And so can we just quickly bring up the Facebook and all the other pages? You guys have over 5,000 followers on Facebook.
Right. We have a very strong digital strategy, all social media platforms. Twitter, Facebook, Instagram, you name it.
I think Centum Financial has 3,000 followers. I mean, they've only really been putting the work in this year, but this is a very niche brand, and you guys are doing a hell of a job, I think, at popularizing it and getting the people to actually pay attention.
I'm popping up a thing called Albert's Story, and I think it's an interesting way of telling the story of the product.
Yeah, we're big storytellers because, really, it's about the people and it's about the impact, right? And so what has this money done for people? We look at Albert, and I invite anybody to go to our webpage, chip.ca. Browse around, have a look at the stories. We're also on LinkedIn. And we encourage people to share how this has, empowered them, changed their life. We have all kinds of stories, right from, one of my reps went to see one of the customers in her home, and on her bureau she had a wine bottle, and my rep said, "Oh, you like wine? Isn't that nice?" And you know, the senior said, oh, yeah, I used to. And she said, actually, there's just colored water in that bottle. I haven't been able to afford a bottle of
Oh,
wine
boy.
in years.
Oh my God.
So when you hear a story like that, and of course
Wow.
the rep at the end of the day bought her a bottle of wine, of course, but when you hear about that small pleasure to the other client we had who, you know, wanted to reduce his work week, but had a company and he had $1 million operating line on his company and it was costing him $6,000 or $7,000 a month to service it, so he couldn't cut his work week back. You know, he had lots of money, went to his financial planner, and his financial planner said, well, there's a smarter way for us to pay that line of credit off so you can cut your work week back. It's called a reverse mortgage. And the guy went, I don't need a reverse mortgage. I've got lots of money. Just give me $1 million. And the planner said, okay, but you know, with your tax implication, I'm going to have to cash out $1.5 million.
Oh boy.
Why don't you consider your tax-free strategy at first? So you know what, he thought about it, and we educated him, and you know, he went from I don't want it to okay, how much will you give me? It's good. Those are converts. So
Beautiful.
you know, he had a really nice, expensive property on the lake, and so we ended up approving him for I think it was $1.5 million.
Oh wow.
He paid off his line of credit, cut back his work week, and then he took the rest of it and bought a vacation property in Europe.
Wow, that is incredible. So it's all about leveraging your money.
And lifestyle and choice, and he's getting income, renting out his vacation property.
Oh, I bet.
He's cut his work week back. He's got tax-free money. So it was a pretty nice solution.
That is quite incredible. And what I was also going to point out, it seems like you guys are doing quite a bit of community work where
Correct.
You guys are reaching out to.
Yeah, that's the other important thing, is if you're going to attract seniors, especially digitally, you've got to become a resource. You've got to become a place that they will go for valuable information.
Mm-hmm.
And things that have nothing to do with your product.
Of course.
Right? It can't all be about you. When you give back to the community and you give them somewhere to go to research, then they start to trust you. This is the Zoomer show. And it's funny, I did a little Zumba demonstration at the Zoomer show just last month. So again, what's Zumba got to do with reverse mortgages? Nothing. But it's got a lot to do with seniors and having fun and being active.
Yeah, and you know what? I think you guys are doing a great job. I mean, you're a great ambassador of the product, I believe. And I also think you guys had an actual brand ambassador that you guys also hired earlier too.
Yeah, we do. Kirk Browning is our spokesperson.
That's the skater?
Correct.
Ah.
Correct. Yeah. And so the interesting thing is, you know, we did a lot of blind surveying, market surveying to find out who resonated with people. Because there's so much misconception about reverse mortgages and how, you know, private and it's financial, it's important to have a spokesperson.
Oh, yeah.
That gives it credibility and also, you know, in some ways gives the senior permission to step in. And so Kirk won our popularity contest with that, and he's been a great ambassador for us. I think, you know, it's a fun fact that he never did win a medal.
Oh.
Isn't that funny? Don Johnson did, by the way, but Kirk didn't. But he's been a fan favorite forever. I used to watch it. I was afraid the guy would fall. It's like, don't fall.
Well, you watch, I mean, we all develop certain attachment to our heroes, that whether it be from, I mean, again, people from the same heritage as yourself and you know, people who are trying to do good for the sport and for the community and for the country out there, right. On the world stage as well. Right. So that's actually quite incredible. I really like the fact that you guys have a brand ambassador. And I think more companies should be trying to do that because
it's expensive. It's quite a commitment. It's quite a commitment.
But it really gives a face to your brand, right? And it really kind of
it anchors it.
Yeah, it gives a little bit more resonance to it, and you kind of feel like there is a little bit more to it than just the service, just the product. There is a little bit more relationship here between the brand being not just a big company, big corporation. There's a face that's associated with it. It has a little bit more persona with the population.
And speaking about that, internationally, it's an interesting thing that some countries don't. They all have reverse mortgages, but they don't call it that. So, for example, in Korea, they don't call it a reverse mortgage. They call it a house pension.
A house pension. I love that.
You get pension from your house. Makes perfect sense. In Hong Kong, the government is sponsoring what they call mini movies.
Okay.
And so they have, I watched it, it was about a 15-minute movie on young Asian families giving what they call housekeeping money to their parents and grandparents
Okay.
to help them keep their lifestyle. And what was happening is they weren't consuming. They weren't buying couches and cars and all kinds of things. And so the government has stepped in and is sponsoring some of these mini movies about reverse mortgages to say, you know what, there might be a better way.
This is in Hong Kong?
This is in Hong Kong. There might be a better way for you to look after your family.
This is very interesting.
And so to us as a company, we thought there were certain nationalities or demographic cultures that would not be open to this product whatsoever, when in fact, educated properly, tax-free financial strategy, they're gobbling it up. And they're buying, okay, I have 3 kids, I'm going to buy a condo for each of them. And I'm going to create income, and I'm going to create legacy, and I'm going to buy a retirement place now.
You get creative with that, and you got enough equity. I mean, it's all about leverage, right? Like we said, it's all about knowing what your options are.
Right. So it's important that the product be positioned in the proper way.
Yeah.
It's important that you understand that the senior's goal is totally different than the first-time buyer. They are not trying to accumulate equity. It's not going to give them anything, right?
That's right.
They're looking for lifestyle and choice. And then it's also important to understand that there's other factors going on in the background.
Right.
There's some stigma. Like I said, they sat at their kitchen table lecturing their kids. So there's some stigma involved. There's a lot of pride.
Oh, yeah.
And so, and you just have to take some time and educate and normalize the process so the customer understands they're not alone.
Yeah.
And it's not their fault. They've not done anything wrong. And then give them the opportunity to come up with a solution.
Beautiful. This is very, very good information, I think, for everybody. I think people just know enough about it, really, quite frankly. Every time you speak to somebody, you mention reverse mortgages, they go, reverse what? How does that make any sense, right? So I think this was an excellent description of what this service does. I'm gonna probably wrap up our interview just shortly after the following question.
Okay.
So, being the show,
Aries, long walks in the park.
Being a show that geared towards entrepreneurs and people starting businesses and trying to understand the markets that are maybe not very much known and not very well exposed, I think that today we had quite a great expression, well, quite a bit of a, I guess, landscape painted by Sue in terms of what's available out there on the mortgage market. But what I wanted to go into just once more to just recap is our initial topic being the demographic in Canada and how it's changing so rapidly, and how everybody should really be trying to pay attention to what's going on with that, because that is going to make such an impact on everybody's businesses in the next 10 years. And if you're not geared towards understanding that senior market is a big chunk of your business, no matter who you are going to be behind.
Correct.
You're going to be 100%. And with a tradition here, we always like to have our guest give maybe a couple of tips to somebody who is trying to approach the market that we're discussing today, being the senior market.
Right.
And somebody who is trying to enter just the senior market for whatever services and products there may be. With given your experience and knowledge about the services and products you guys provide, what a couple of tips you guys could give them just to kind of not burn themselves too early on to
Okay, well, the first tip I would give is to get involved. You've got to get involved. And the best way to get involved, the easiest way to get involved is social media. Start sharing posts. Follow us. Follow us on the different social medias. You don't have to create content. Just repost our content. It's free. Use it. Secondly, do some homework. Do some research. Find out about the demographic and what their needs are. And then give them something. Give them a resource. Give them good quality information. Give them something. And things are not always as they appear. I'll just close with a little story about seniors. and how you think they're one way and they're really not that way. And
Please.
it's about the senior gentleman that goes to his doctor, and he wants to help his wife with her hearing problem. And so he says to his doctor, my wife's got a hearing problem, I want to help her. And the doctor says, well, just slow down a minute. Let's do a little experiment to find out how bad her hearing actually is. And he says, okay, well, that makes sense. And so the doctor says, you know what, next time your wife has her back to you, stand about 20 feet back and ask her a question. And if you don't get a response, move 5 feet closer, ask her the same question, another 5 feet, until you get an answer. And then we'll have an idea how bad her hearing is.
Okay.
So he's very excited. He's got something to work on, a project. And he goes home. He walks into the kitchen. His wife's at the sink preparing dinner. She's about 20 feet away. Perfect. He says, honey, what's for dinner? He doesn't get a response. So he moves 5 feet closer. He says, honey, what's for dinner? Still no response. He does it 2 more times. Now he's 5 feet away from her. He says, honey, what's for dinner? And she turns to him and she says, for the 4th time, Harold, it's pot roast.
So I guess the moral is pay attention.
Pay attention. Things are not always as they seem. These are not old people. These are active, smart people.
I love that. That was actually quite an ending. Sue, thank you so much. This was
my pleasure.
One and only Sue Pimento of HomEquity Bank with us today. Thank you so much for coming.
Thank you,
it's been
sir.
A real slice.
A real pleasure.
Your host, as always, Konstantine Polyakov. Please make sure to follow, like, and share this stream, as well as HomEquity Bank and the Pocket Broker right at the bottom of the screen as well. Guys, thank you so much for tuning in. Have a wonderful evening, and we'll see you in 2 weeks at episode 8. Have a great day.
Good night.
Thank you for watching. That was PRsonalities. And we hope to see you in 2 weeks when we get to shoot yet another episode of this show. Meanwhile, you should probably like, share, and follow all of our social media accounts. That would be Facebook, Instagram, and YouTube, where we will be posting a slightly better version of this exact same episode. See you soon. Bye. What are you doing here? Who is producing the show?